Our tutorial, Commodity Channel Index Stock Technical Indicator. Stock technical indicators are calculated by applying certain formula to stock prices and volume data. They are used to alert on the need to study stock price action with greater detail, confirm other technical indicator signals, or predict future stock prices direction. This topic is part of Stock Technical Analysis with our course. Feel free to take a look at course curriculum by clicking link at the description box below. This tutorial has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please read full tutorial disclaimer at the end of this video. Commodity Channel Index is a bounded oscillator that measures the stock price's variation from its statistical mean. 20 days and constant factor are commonly used to make sure most values fall within bands. For full reference, I recommend that you read Donald Lambert, Commodity Channel Index, Tools for Trading Cyclic Trends, published in Commodities Magazine, now Futures Magazine, in 1980. Technical indicator is calculated through following steps. A. Typical price calculation. Current period typical price is equal to, and then within the numerator we have the sum of high plus low plus close prices at time t divided by 3. B. Typical price smoothing calculation. Current period 20-day simple moving average of typical prices is equal to 1 divided by 20 multiplied by the sum from the 0th to the 20 minus 1 observation of previous period's typical prices up to current period typical price. C. Mean absolute deviation or average deviation calculation. As a formula, current period 20 days average deviation of typical prices is equal to 1 divided by 20 multiplied by the sum from the 0th to the 20 minus 1 observation of the absolute value of previous period's typical prices up to current period minus the corresponding 20 days current period's rolling arithmetic mean of typical prices. D. Commodity Channel Index calculation. As a formula, we have that current period, 20 days, and 0.015 as a corresponding constant factor. Commodity Channel Index of typical prices is equal to, and then we have within the numerator current period typical prices minus current period 20-day simple moving average of typical prices divided by 0.015 as a constant factor multiplied by current period 20 days average deviation of typical prices. Great. So let's go into RStudio so that we can study Commodity Channel Index with greater detail. Excellent. So here we are within RStudio. In this tutorial, we'll be working within Commodity Channel Index Stock Technical Indicator code file. The first step within the tutorial is to load its packages. This is done with the library command and within it the name of the package. So for this tutorial, we'll be using TTR and QuantMod. So we select these two code lines and then we click Run or Ctrl-Enter on the keyboard, which is equivalent. The next step is to create the data for the calculation of the Commodity Channel Index. This is done right here by creating an object named SPY, which is equal to read.csv. Within it, we have the name of the data file, CCI or Commodity Channel Index Stock Technical Indicator Data.txt as a plain text file with .csv or comma separated values stored within the working directory. Comma header equals to true. So we select the code line, click Run or Ctrl-Enter on the keyboard. And that created SPY object as a data frame within the global environment. So if we click on the spreadsheet kind of icon, we can visualize this data, and it corresponds to the following columns: dates, SPY open, high, low, close prices, volume, and adjusted close prices. SPY corresponds to the ETF investment vehicle which intends to replicate the Standard & Poor's 500 index. adjusted close prices because they were adjusted for dividends and splits. And we have data with the daily frequency from the beginning of 2016 all the way to the end of 2016, therefore 1 year of data or 252 observations for each time series. So going back into the code file, the next step is we're going to convert that data frame into an XTS or extensible time series. So we override SPY and we do so with XTS function, and from the previously created SPY data frame we're going to select its columns from column 2 to column 7, and we're going to order by equals as date, capital D, SPY using the first column. So we select that code line, click run or Ctrl Enter on the keyboard, and notice here that it's now an XTS type of object stored within the global environment, and if we open again that corresponding data, we see that the dates became its index. And now that we have our data ready, we can continue with the calculation of the commodity channel index stock technical indicator. This is done by creating this variable, which we're going to name CCI for Commodity Channel Index, and we'll be using CCI function with capital letters, and within it we're including high, low, and close prices from SPY, comma N, that's the number of periods for which we're calculating the Commodity Channel Index, and C, which is the constant factor at 0.015. Notice that these 20 periods and the constant factor at 0.015 are the parameters commonly used, but they are not fixed and therefore they can be modified according to your needs. They were only included as an educational example. So we're going to select that code line, click run or Ctrl Enter on the keyboard, and that creates CCI object again as an XTS stored within the global environment. So by opening the data object by clicking on the spreadsheet kind of icon, we see the calculation of the commodity channel index. And right here, we need to scroll down until we have the first calculation of the commodity channel index. The reason these first values are non-available is that we need at least a certain number of observations for the first calculation of this commodity channel index. So going back into the code file, now let's proceed to visualize this corresponding commodity channel index stock technical indicator. We're going to do so with a bar chart with capital C of SPY with the theme equals to chart theme with capital T as white, so it has a white color background. Then we're going to add the CCI or commodity channel index and as its parameters N equals to 20, which is the number of periods for its calculation, and C, which is the constant factor, equals to 0.015. So we select these two code lines, we click run or Ctrl Enter on the keyboard again, which is equivalent, and we'll briefly visualize the chart. Excellent. So let's go ahead and zoom into it. So right here we have, first of all, at the top SPY chart. On the vertical axis, prices, and notice that this is a bar chart, therefore we have open, high, low, and close prices in each of these bars. And notice that whenever the bar is colored in green, that's because the corresponding close price was higher than the open price. When it's orange, it's the opposite. It's when the close price was lower than the open price. And next we have the volume, and at the bottom we have the commodity channel index as a bounded type of oscillator with its corresponding parameters included. Notice that these three charts share the horizontal axis of dates, which is from the beginning of 2016 all the way to the end of 2016. Excellent. So now that we finished studying how to calculate the commodity channel index stock technical indicator and to visualize it within its corresponding chart, let's go back into the slides. And as mentioned previously, this tutorial has an educational and informational purpose and doesn't constitute any type of trading or investment advice. Please pause the video now so you can read the full tutorial disclaimer. Okay, so with this, we finish this tutorial. Thank you for watching.